I'm Chad Craig, and this is Money Mindsets Matter. And remember, if you're not preparing, you're not prepared. And if money doesn't matter, then what's the matter? Well, here we're in season two, in episode 8. And we concluded last episode talking about next steps. And so once you see it, you can't unsee it. And if you want to move forward in putting this system in place for you or your family or your household, what those next steps were, you can check that out. And then the episode before that was starting your own creek bank and looking at the issue of words and pictures of an actual creek and the flow of water and the flow of money and how that informs us of designing our system. Now, I do want to thank those that are tuning in for the first time. We would greatly appreciate you hitting the like button, the subscribe. Those that have found us from Instagram, we're getting a lot of views on Instagram. We appreciate you subscribing. Those listening by podcast, if you'd also just subscribe on the YouTube, we greatly appreciate it so that we can serve more people. And we're passionate about truth, understanding money, money mindsets, and concepts about money, and ultimately helping you design a system that brings more variables and liberty and freedom to your finances and for the ambition and desires that you have. And so we've been looking at my journey, how I got introduced to it and began to progress and utilizing it. And I do want to give a shout out if you're a business owner currently or a high income earner. Also, if you're an overseer of a nonprofit, on a board of a church, or a senior pastor or senior leader of a church, a nonprofit, listen, you don't have to continue to wait until I get further in the episodes and talk about the relevance of how it can benefit you. Just set up a clarity call and reach out to me, and I'd love to share with you what I'm already doing with my system of policies and how to utilize it for your needs. And so if you've just found this or been listening, I've been reflecting on how I've learned and used it in these previous years, but I've not yet filmed and talked about how I'm using it currently. And so I don't want you to think that we're not for you or don't know how to serve you. We can, and we can accelerate your business and your needs and your funding for nonprofit endeavors and things like that. We'd love to talk to you. Reach out to us and set up a clarity call, and we appreciate you. All right. Now, with that being said, I want in this episode to talk about starting your banking business. Starting your banking business. When you think about banking, it's something we all are involved in. We're just not all aware that we're involved in it. And by definition, I want to read to you, banking is the business of receiving, lending, exchanging, safeguarding, and storing money or capital. You're in that business whether you're consciously aware of it or not. You are engaging in that business. And so it's not like you can not be engaged in that business. You are. The question is, why not start taking control of that you're engaged in and understand you can start your own banking business? And so Nelson Nash, the founder of IBC Infinite Banking concept, would say everybody's in two businesses. The one that you go to every day, your job, your career, your work, whatever you do, your vocation, and then the banking business. Because we're all engaged in the receiving of money, the storing of money, the protecting of money, the transactions of money. Many of you are borrowing, and so you're in the process of banks and institutions and credit card companies lending to you. So what does it look like to start your banking business? Well, your entire life you're going to spend money, and your entire life you're going to need to store money. And the sooner you get your own system, the sooner you take back financial freedom in your life. See, wealth must reside somewhere. Why not choose to have it reside in a place you control that gives each dollar multiple jobs simultaneously? And so, in a previous episode, when we looked at creating your system and why it works, it was with the understanding that your money is continuing to grow uninterrupted at a compounding rate while you still have the ability to access and utilize the cash value, okay, of your system and policy without interrupting the interest and dividends and the growth of your policy and your cash value. See, there is no other place in the world that gives you that ability to use money with such guarantees, control, and flexibility that you get to dictate, while at the same time not interrupting the compounding growth, interest, and dividends of your money. That is the power of the system we're talking about. And it's so foreign to most people. And it takes most of us many times to understand and get clarity on that, because most humans, when it comes to any issue, think in terms of either or. Either or. Now, part of the way God wired me and gifted me to serve people and His creation and His followers is that I'm able to see beyond either or, but see within a both and framework, mentality, mindset, and strategy. And that's why my second book, I don't know if I mentioned it, is called Building with Balance. It's a book on local church culture and the culture of a congregation in regards to discipleship and following the pattern of sound teaching, the divine design for discipleship. So for years, I've served people and served in nonprofit contexts to help people understand that it's not an either or option, that it can be building with balance of both and. And it's our human frailty that makes us vulnerable to always think in terms of black and white, either or. And when it comes to a dividend paying, specifically designed dividend paying life insurance contract with the mutual company, it gives you the ability, it gives you the freedom of not an either or strategy, but a both and. It is a place to store your capital, your money, to do what you're already doing, the banking business, but to do it in a way where you control it, and to do it in a way that allows you and your family, if you're married, or your kids, your heirs, beneficiaries, to do it with more benefits, okay? And so it provides safety, it provides guaranteed rate of growth and interest, it provides protection from creditors and lawsuits. It is a place that we can store our capital and our wealth, but not stored in a way where it's locked up in money prison like many other financial vehicles, okay, like a 401k or a pension plan that you can't access early, okay? If you do, there's penalties and there's taxes, all right? This is a place designed that can accomplish that, but at the same time, provide liquidity. And not just liquidity, but guaranteed liquidity, meaning guaranteed access to a money pool where you can utilize that how you want, whether it's in liabilities or buying assets, whether it's dealing with the flow of things that's already coming and going, being purchased in your life, or whether it's for endeavors to expand your influence or your business or your assets, things that brings money back to your pocket. So this is the power of starting your banking business, all right? Now, as someone that in the local church context has served the body of Christ for 20 plus years, and specifically in discipling followers of Jesus, when I think about that and how God has used us to do that, and I think about what we're now doing and what God's called us to do with Money Mindsets Matter, I see huge parallels. Huge parallels. We do what's called growth phases, and growth phases is called different things in different churches. So I have a consultation ministry and business that consults with local churches of how they can utilize our discipleship curriculum, books and outlines, videos to serve God's people in their context. And with that being said, I've seen that one of the major roadblocks for believers and followers of Jesus to take that next step and do it is busyness. When you talk to believers that, according to their confession, say, I love God, I love Jesus, I want God's will for my life, a major hurdle that keeps them from moving forward and understanding the new covenant and understanding what God has for them is busyness, and busyness keeps them from taking action. From taking action for something that they sense they should do and want to do, but busyness keeps them from being conscious of those questions and those desires. It's the same thing when it comes to finances. I've seen in the body of Christ that it's not the smartest, it's not the greatest that move ahead in God's purpose for their life. It's those that don't allow busyness to lead to distraction. When God's put something on their heart, they take action. And they don't allow fear to keep them from taking action, because as they take action, they get more insight, they get more understanding, which then provides more knowledge for them to take more action. So they're not moving in haste, right? He who moves in haste leads to sorrow or difficulty. This is not talking about hasty action. It's talking about action that's informed, action that internally we know this is something that would be best or better, a better way for me. Well, it's the same thing in the financial world. It's the same thing. That when it comes to money, mindsets that matter, busyness keeps people from looking and taking action and the next steps. Now, why does it matter on the Money Mindsets Matter, or you building or creating your banking system? Why does busyness matter so much? Here's why. Because the best vehicle to take control of the banking function in your life that gives guarantees and liberties by contract just happens to be a health related instrument, a life insurance contract with the mutual company that's specially designed and dividend paying. So because the best vehicle to take back the banking function in your life happens to be something that's connected to your age and your health, you see why busyness is such a danger. You see why not taking action is such a danger. Because if I delay what I know is a better way and don't take action to start getting my system going and the momentum of my system growing, the delay can mean an unfortunate event can happen where then maybe I'm no longer insurable. I'm no longer able to access the vehicle that the wealthy and business owners and doctors and real estate agents and high income earners and people that just want to take back the banking function of their life and the things that they're already purchasing, like vehicles and homes and large vacations and large purchases, that the people who's already doing that understand the benefit and the power of it, okay? And so this is something you must keep in mind. See, Nelson Nash says your behavior in managing the system is the most important factor in the entire equation. And see, he says that in Becoming Your Own Banker on page 63. What he's saying is that when we talk about taking back control of the banking function of our life, we're talking about taking back something that puts more liberty and variables and choices in your hands, in your heart, and in your head. And because of that, that means ultimately your system and the efficiency and the strength of your system long term is going to be most dependent on you being a wise banker. Well, to be a wise banker first means you understanding you're already in the banking business. Secondly, it means that when you start your business, you learn good qualities of what it means to be a good banker. And so this is the power of starting your banking business. Now, when you start it and do it moving forward, if you already have been engaged in the banking business, okay, but not one that you lead, but one you're more of a slave or more dependent on the terms of institutional or Main Street banks, then you probably have a good amount of outstanding debt. And so in the journey, when we talk about how I got exposed to it, began to engage it, we're at the point where some of you, who it's new to you, is at the point where you're asking questions. How can this accelerate me getting out of bad debt? And as we talked about in starting your own creek bank, getting the flow of that lost capital and that interest that's lost forever from your hands and from your lineage that's going into someone else's bank, how do I get that coming back? Well, I want to talk about that a little bit, all right? And so let's say over here represents debt that you have outstanding. And let's imagine that some of this is credit card. And let's say that credit card currently is 20% interest. Let's say you have a car loan that's at 7.5%. Okay. Now, I'll leave mortgage out of it because of the uniqueness, a once in a lifetime, at least for all those who are on the earth currently, of what happened following the GFC and the global financial crash that then led to 0% or negative Fed interest rates that allowed lending from main institutional banks to get into the 3%, right, and 4%. So a lot of people wisely refinanced mortgage or bought homes during that period. And so, of course, that's creating some of the housing issue that we have currently in our nation, not just the increase of the population needing housing and a lack of housing shortage, but people not willing to move from their existing home because of that once in a lifetime thing. I don't know if I shared, but when my father passed away and I took care of him and his estate, things like that, his what he had, I was going through a document and I found on one of the homes, the only home that he owned in my lifetime, and he only owned it temporarily, but that mortgage on that home was 18.98%. Okay, so when I say once in a lifetime on those 3% Fed, zero negative, it has been that within, my grandparents who are now on to be with the Lord, their lifetime down. It's once in a lifetime. But let's look at even this, okay? And maybe some of your debt outstanding is different, all right? So you have this. How can you taking the banking function of your life, or you understanding that you're in the banking business, so why not control the banking business by putting you a banking system in place? How can it accelerate you getting out of debt? Well, here's why. Because when you put money into your system, And then you have it's turned into cash value. Then you get contractual rights to the money pool of the mutual company. Why mutual company? Because they don't have stockholders. Mutual in the sense that each policy owner is considered a mutual owner. And your current cash value determines the part of the money pool of the mutual company that you have a right as part owner, first right, to capitalize and utilize, okay, at your discretion. In fact, I was talking with someone today and walking through it, and they said, so if I called and asked for a loan, I said, well, you don't ask for a loan. Let's get our thinking right. You're in control of the system. This is unilateral contract, okay? And you call and say, I need this amount of money. I want it deposited in my account, okay? And it happens. We're talking about a system of putting control back into your hands. You are the gatekeeper now, not you. Now, your cash value determines that amount, but here it is. Now, here's the powerful thing that I've not mentioned to you. When that policy loan comes out, what you don't know is, what if I told you 4%, 5.65%? That the primary mutual company we use them because they give you, in the policy loan, two options on that loan. A fixed rate option or a variable rate option. And right now, the fixed rate is 4% and the variable is 5.65%. What that means is, I know for my lifetime, okay, and the multiple policies that my family that we have, that I always contractually for the lifetime, the policy that's on me, can access and collateralize the value of my system at 4%. Now just think of the freedom. Think of how now I actually have the banking function back for me and my family and my household and my lineage. Think of how now I'm not just passively involved in the banking business, but I am intentionally, purposefully started a banking business. And so I also know the worst case scenario of accessing is 5.65, that variable rate. And all this is contractually, okay? And a clarity call, if you have more questions, I understand all these specifics. I can tell you what determines the variable, all of that, okay? So, but here's the point, the big picture, okay? Because we're understanding concepts. Now how those concepts inform and apply when it comes to banking. And then we can begin to start thinking infinitely. Okay? As Nelson said, an activity of logic, all right? Prophecy, imagination, infinite. Well, you don't have to be good in math to know that 5.65% is a lot lower than 20% and even the 7.5%. Now, in financial math, there's some differences than how we think of when it comes to normal math. Let me give you an example. If I were to tell you what's the difference between a 1% rate and 2% rate, how many of you were like me in the beginning before I understood banking math, financial math? You would say what? 1%. I get the answer all the time when I talk to people about this. And that, of course, would be wrong. It's not 1%. The difference of 1% and 2% is 100%. 100%. See, that's why banks make a lot of money. And when you understand the power of the banking business and you start your banking business, you understand how much velocity and acceleration can happen for you financially. Because this, if you were to give the bank $1, and they're paying you on that dollar 1%, which good luck with that right now, they then lend out the dollar you gave at 2%. So on that transaction, they're making 100% return. Now just use imagination, use logic, prophecy, think long term of how the now affects future. What happens when they're doing that with millions of dollars? What kind of return are they getting? So you got to begin to see it. You got to begin to understand it. Okay? So when you talk about 5.65% versus 7.5%, yes, the common acceptance we have to be clear on is this is lower than that. Meaning your banking system is stronger and keeps more money and gives you more options than if you are depending on someone else's bank. Okay? So, this is how you can accelerate getting out of debt, because you have access contractually to a pool of money at 4% or 5.65%. And you can use this money and do what? Start attacking that. Start attacking that. And you can do the math. I didn't do it before I started filming, but you can figure out financial math of the spread of you getting access to capital at 5.65, that's reducing your outstanding debt where capital is flowing away from you at 20%. That's a major, major recapturing percent of interest and money for your system, for your family, for you if you're single individual. Same with the car loans, okay? And every time this money and this gets reduced or paid off, okay, then you have more money to flow into your system. And this is why when we talked about what determines the depth and the width and the height of an actual creek was how much flow of water has ran through it. Okay? Well, this is why you determining how much money you can get in your system in the beginning and how much flow of money you know you can each year put in your system is going to determine how much liquidity and the strength of money that can flow into your system. Well, the problem is once you start knocking outstanding debt, you're going to have more free cash flow than when you started your system, which is why you have to then begin to think about getting a system of policies, because your first one probably is not going to be able to contain long-term all the cash flow that's going to be created just by you tackling your outstanding debt. We're not saying to work harder. We're not saying that you've got a third side hustle job. We're saying that by first answering the question, where do I store my money and where do I put it first? before it's sent out to debt outstanding, begins to show you how acceleration out of these positions where you are a slave to the lender, where they dictate the terms, begins to free up cash flow that then can lead to starting another system that then gives you access to more of the money pool. Okay?